Good morning, guys. Can everybody hear me? And is the screen quality good? Okay, great. Thanks, Daniel. So, we can already tell, we've had quite a range in the overnight with econ data. According to my, at least looking at Forex Factory, we don't have any more data this morning. Everything else that comes out at the top of the hour. The only thing that I see on the radar to pay attention to is that there's an FOMC member speaking at 9 a.m., top of the hour. So occasionally when those guys say something, it can cause a spike one way or the other, but they're generally pretty careful, and it ends up being a non-event as far as we're concerned. So this morning will be interesting. We have some cross currents. Obviously, Twitter missed last night, and I imagine that's going to bring. It was one of the four horsemen that was really helping the Nasdaq. We'll see how that affects this morning. Obviously, NQ in the morning was leading us to the downside, and we'll see if that picks back up again. Pretty much as soon as we opened, European sellers came in and kind of pounded us right after the econ data. But even before, we were getting a little selling. The other thing I wanted to point out was that we're pre-non-farm payrolls, and generally that means that we're in balance for the day. Now, it can be a wide balance, right? But we end up spending most of the day in one particular area. And if you look at yesterday's trading post 12 p.m., that's balance, if you want to see what balance is. And generally, you want to trade from the edges. It'll tend to have a lot of head fakes, meaning that it'll look like it's going to break down on the edges, and it snaps right back and goes to the other side where it proceeds to look like it's going to break to the upside, sucking people in on both sides. So if you're a chaser, that smokes you. If you're someone that can buy the edges and you're comfortable trading balance, there's no clear setup. There's no extreme on it. It just kind of looks like, oh, it's about to break out. Then it snaps the other way. So let's kind of go through the scenarios for this morning. We've been all over the map. Currently, we're trading. This will be the executive summary portion. Then I'll go into the various other charts that I have for those that want to jump off. So if we open, assuming we open where we're at right now, that puts us just above the white zone at 1747. I had a bunch of questions about the white zone the other day. So in October, November, and parts of December, the white zone would get run over if we opened close to it. That was because we had an overabundance of open drives up and open drives down. So without the rotation size, which obviously if we open at 1747, we will not be getting that rotation that everyone, excuse me, at least that I like to have, right? So I would consider this an aggressive trade. It doesn't mean that I won't be taking this trade, but I certainly won't be calling it out. Yesterday I simply missed it. I ran over here and I didn't have a chance to take the trade to the downside. It is usually, over the years, has been a very high odds location for a 2-point rotation out of it on the first move in. However, because it tends to rattle, particularly newer traders, I no longer call the trade out simply because it can be very disheartening in the first 5 minutes, right, to get ripped right through, and it sets you back on your day. So what I recommend on the white zone is one of two things. Keep track of the data on the white zone, and if the data supports and fits into your risk profile, add it to your trade plan. But if you add it to your trade plan, you simply have to understand the white zone is going to almost always be somewhat near the open, and if that's the case, right, you're going to have to accept that getting blown through on occasion is part of the risk of that white zone. So I would consider it a high risk trade. I will almost never call the trade out unless we've had a big fat rotation. If we were to open here and rotate down like this, or vice versa, open here and rotate up like this, then I'd probably call it out. But outside of that, when we're opening right above it, you're not going to see me call that trade. It simply stresses too many people out. And so at any rate, it is a trade that I normally take. But like I said, I won't hammer that anymore. So at any rate, if we open 48, it would put us right below Wednesday's high. And in this case, right, I would look for it to come back. This is also gap fill and Globex low, right? I would look for responsive buyer share the first time in for another push towards Wednesday's high. If the test of Wednesday's high is successful, we can get above, right? That would certainly give us a shot at Globex highs, right? And above Globex highs, we can continue on and up into initial resistance. Now this 60 and 64 and 3/4, and even up here at 70, I expect an opportunity to find responsive sellers to push us back down. How far down? I have no idea, but it will be sufficient enough to leave a portion, right, of my trade as a trailer in case I get that right. Also, just because I scale half my trade and leave a trailer, as you can tell, the ranges have gotten wider. And so I am more inclined to let my 2-point trade come back against me and stop me out, because I realize that I can have a 15 or 20 point day to the downside, and so it's worth me leaving a larger trailer. The reason why I'm saying this is if you're newer or you're building your account, right, even if you have a trailer left in, I would still, as a coach, right, want you to take the majority of your trade off, particularly if you've started building your account with me in the last 4 months. Take it off, put that in the bag, and leave a small trailer, and see how far you can push that trailer down if you have a target in mind. That target should be supported, by the way, on your spreadsheets. If you calculate the average MFE, maximum favorable extension, right? Excursion, excuse me. You should be able to calculate what your average is on your trailers, and that's what I would use to target. Guys, all of y'all should have that data. Speaking to my coaching clients, all of y'all should have that data. It should be easy for y'all to pull, and will make it very easy for you to figure out where you're trying to get that trade to go. And by the way, skew that data, pull it back to 80% of the trades, right? So drop off the top and drop off the bottom few, and you should get an average in the middle. If you have any questions about that, y'all can hit me directly later today. So if we move to the upside, I'm going to look for rotations in these levels specifically, right? Along with, based on where we're opening, which is the 1748, right? So first move into the Globex highs. I would expect responsive sellers there as well. Again, the concept being that we're going to have balance. So what that means is that balance can look like this, right? We can simply do this very slowly through the course of the day, or we can do this. Option B is, let's see, we're opening here, so it looks something like this, right? Where we just get a retest of the lows, and then we can come back up and balance like this, okay? But what ends up happening is when you look at the volume profile, the vast majority of the volume takes place right, whatever we end up with, right in the middle, okay? And just because we're in balance doesn't mean that we can't balance with an upside bias or balance with a downside bias, okay? But normally pre-non-farm payrolls, particularly in the afternoon, because what institutions and hedge funds are doing heading into that non-farm payroll number, it's extremely volatile. They're hedging and or squaring off positions so they don't get killed if there's an outsized move up or down on non-farm payroll, okay? So we end up with a lot of balancing, particularly towards the end of the day. Okay, so let's look at the first thing we're concerned about, right? Open drive higher. I pound this every day. The reason why is because open drives higher for fading traders, which I am, right, are killers, right? You can get 1 or 2 stops at the beginning of the day, and it can be very frustrating. So if we open at this 50 level, okay, 1, 2, 3. I would look for 3 green bars. Again, it doesn't have to cover a particular distance, just 3 solid bars up, right? There's no data after 10 a.m., really after the open today, besides the Fed speaker. So short of him saying something, by the way, that's another indication that's going to be hard to drive the market one way or the other. We've already had the econ, and quite clearly, no one knows what the hell to do with it, right? We've had it sell down, we've had it sell up. On the downside, right, same exact scenario, okay? So if I identify an open drive lower or higher, even if I'm taking contra trades prior to 9:30 a.m., I am not going to try to stick that trade to a reversal. The other thing that you got to keep in mind, look at yesterday's pattern, right? We went right to 9:30 a.m., we peaked at 9:30 a.m., and, excuse me, in yesterday's case, 9:30 a.m., and then we rolled up for the rest of the day. I said in the morning, would not be surprising to see us take a full round trip. And I would say on that exact same concept today, if we drive up or down, it would not be surprising for me to see us by the end of the day take a full round trip. That's exactly what a balanced day is we essentially go nowhere. And then in that case, right, the best trades are from the outside back into the middle. Okay, one of the ways you'll know that we're not having a balanced day, by the way, is that your tick will not stay pegged all negative or all positive, right? In addition, we'll tend to stay within plus or minus 500 on the NYSE tick. So another thing to keep your eye on. And in addition, the spikes above 500, right, will tend to be at or near highs. So if you see that pattern developing in the morning, you can certainly expect more of it in the afternoon, right? And remember, the typical day, no matter what day we're trading, right? If it's a down day, we tend to have a small push in the morning, push down, and then somewhere time-wise between 9:30 Central, 10:30 Eastern, and let's see, 12 p.m., but really closer to 11:30 a.m. Eastern, 10:30 a.m. Central, right? We will start to push up. And even on days where we do not successfully push back up, you'll still see in those time frames, right, stronger attempts to push higher in that time of day. And conversely, not so much when we've been up because we're in such a bull market, but even then, smaller pushes down from this time of day, even in trend days up, right? And if it's a strong trend day up, we just end up starting to balance in that time of day, right? So if I'm going to take contra trades and I want to make them stick, right, I really don't want to give that a shot prior to 9:30. There's always exceptions to the rule, right? And it doesn't have to work that way. And even on days where we have trend days down, right, we'll have the counter rotations will start to get larger at that time, even if they push down and they keep, we keep with this pattern. They get larger till about afternoon. And then if we're going to fall apart, again, trend days down, where we truly close on the low like we did the other day, they're rare. Most of them end up kind of coming down and then closing like back up like this. Okay, trend days up, by the way, on this pattern, right? They're much more common if we get a trend day up, right, to either close on the high or kind of sputter and do this on the balance. It's been a long time since we've had it trend up and then completely fall apart at the end of the day. You have to go back about 2 years to see this type of trading action. It does exist. Okay, so just to be clear again, if we don't get a trend day up, an open drive up or open drive down, what I will be looking for is balance. If I see that, what will make me change my mind on balance or grow in concern, right? Well, the first is if we come down for a test of Wednesday's low and break, right, that would be a concern right there. Even though initially, okay, so this 26.27 on the downside is big. Everyone knows it's big. 27 in particular is what everyone's targeting. So it wouldn't even be surprised if we get to 27.5, 27.25, and you get like 100 contracts go off at 27 because everyone and their brother knows that 27 is big, okay? So I would expect responsive buyers. Wednesday low then becomes a big test, right? If we get back above Wednesday's low, once again, I would expect to push back up to the upside on a trap trade. I don't chase trap trades, but if I have a long from a level below, I will tend to leave it alone so that I can capture a portion of this move, right? On the other hand, we come back up, we fail Wednesday's low. I would look for 20.22. Below that, I believe we have 15.17, 10.12, 16.99, 17.01, and I believe 04.06 or 03.05, one of the two. I'll have to go back and look. If we get down there, I'll publish the zones. But those are the areas below. Again, I don't expect a dramatic move either way. I expect a lot of what we probably got in the pre-market, which is a lot of wishy-washy, up and down, quick trades, and I'm not expecting to leave my trailers on for very long unless I see something different. On the upside, right, I want to reiterate, we get to the 60, 62, 64, 66. If you'll go back and look at your chart, you'll see that we rejected out of this area multiple times. We had one morning where we tested that 60, 62 pre-market. On the open, we got above 64, 66. We tested it, and then we took off. On the breakdown, right, we opened just below, I believe we opened just below 64, 66. We tested it. We got to 60, 62. That was the actual break, right? We held last time in the after hours market, and that was the break. So when we get back up here, I would expect responsive sellers, right, here and here, and I'll be willing to try to stick trades and take losses here because the roll down from here could be a 10-point roll to the downside from either one of those locations. That's my trade plan for today. Again, there's not a rush. I want to keep an eye on the focus of what I'm trying to accomplish. Primarily, 1 or 2 trades is all you need for 2 points apiece to build your trading account. Most of my clients are well above 70% on their trade execution, closer to 78% this month, 80%, okay, when we've looked at the numbers. So all you need is 1 or 2 trades a day. Plan to increase your trade size, and then switch from, even if you want to be there, switch to a learning mode where you're learning what the market's doing, and make sure the trades you're taking are high odds trades. Also, in addition, as the day proceeds, right, and just like yesterday, you saw when we lost European participation, right? Europe was clearly the seller yesterday at 10:30 a.m., right? Look to see a replay of that. If Europe's nervous and we push down, I would not be surprised at all if just prior to Europe closing, we get a push back up, right? You saw that yesterday. And essentially, for the most part, buyers were in control of the balance of the day. We've had cycles where Europe was seller, U.S. was buyer. You can just go back and look at, I believe it was June or July, okay? The markets get sold off overnight. We'd have maybe a down first hour and then buyers all day long. We could be going back into that pattern. I'm not saying we are in that pattern, but I'm looking for it, right? So I'll look for a repeat of yesterday. If we get to 10:30 and I don't see responsive buyers, right, that's good information. That tells me it was a one-day phenomenon and I can relax, right, and just go about my day regularly if I take trades. In the late afternoon, I am usually trading half of what I'm trading in the early morning. Why? It's harder, it's riskier. Also, I'm generally disinclined to take trades in the afternoon session, simply because of what we had yesterday afternoon, and we'll take a quick look at that. Okay, look at this. This is 11 o'clock on. Okay, this is a range from 1750 down to 1744. This maybe looks tradable to people. It's not very easily tradable. These whips, okay, are awful. They can cause you to get nervous. If you're not an ice cold trader and you're not convicted, right? Look at this. Even if you got the short perfect, you had one test, you got all the way down, you thought you were breaking down, snapped all the way back. You had to be willing to hold this, and then on the closing drive, you finally got paid, right? But you only got paid equal to what you would have gotten paid back here, right? It becomes very hard, and it's very hard to get a directional move. It takes a lot of patience, and that is generally why I don't like trading the end of days. And if you took all the days in the year, right, we tend to remember these and remember these. But if you take all the days of the years, these are the vast minority, I would say, 30% of the time. This is 70% of the time, and that's why traders get frustrated. They see potential moves. They're in this area. They anticipate a big move up or down. Instead, they end up taking 2 or 3 losses in this area, wiping out all the good work from the morning. And you can see, compare the range in the morning compared to the afternoon. You can go back and look as many days as you like. That's the results. Okay, so it's 8:20 on NQ, right? Let me just jump over that chart really fast. Okay, NQ was the leader down and up yesterday, okay? And so what I'm looking for over here, you'll see we led on the way up. We clearly put in a higher low, and we followed that exact pattern that we follow almost every day. 9:30 we started the turn. By 10 we were in full motion. Europe closed, and then chop in the afternoon, right? The afternoon options are like this: chop, up or down, and I don't even bother calling it this early in the day. There's no point. Okay, so with that scenario in mind, we're opening at 3460, which puts us right in this zone. White zone for NQ is all the way down here and below Globex low, so this makes it a bit tricky, right? The reason why I put it here, well, I won't go into the reasons I put it there. I thought that was the most appropriate place today, keeping an eye on the concept of that we could have a higher low and push out of this and up to these upper levels, right? It's certainly possible. Also, this is Globex high, so obviously if we're going to have an up day, first thing we got to do is clear Globex high. If we're unable to clear Globex high, there's really no point anyways. This is yesterday's high. This is Globex high. In essence, this whole thing is actually a zone. It's 10-point wide zone. Not easy to place a trade there because, right, you take the front of the zone, it can reject right down. You take the back of the zone, you could be caught in an open drive. I don't like any of this. Also, keep in mind the ranges have doubled, so I want generally a 15 or 20 point rotation before taking contra. I make exceptions to that on the fly if I see something change, but generally speaking, if you need a rule of thumb, I would not be shorting any earlier or counter trading any earlier than a 15-point rotation. We've had 30 to 60 point ranges on NQ, and the biggest range I think I saw was 90. 90 points down the other day. Was that Monday, I believe, maybe Tuesday? So 30s have been working very nicely. Yesterday afternoon when we were down 30, we found responsive buyers on NQ as well. So 15s and 30s are working well. And most of my trades in NQ, like I said, are scalp trades combined with occasionally these zones. These zones, by the way, on NQ, it can get traded over and still hold because it's a thinner, it's a more thinly traded futures contract. It can overshoot its zones, and so you have to give it some leeway, which means a lot of times when I'm watching NQ, in addition to being at the zone, I'm looking for a pause in the dome. Okay, and I don't have any way to explain it other than if you watch very closely, you'll notice that on occasion it actually stops. And that's what I'm looking for when I'm taking a trade in NQ. It'll stop, it'll sit there for 10 or 15 seconds. That's what I'm looking for a potential reversal. And even then it can stop, kind of trigger a little down, and then reverse from there. So something to keep in mind, we're looking for the exact same caution signs on the open drives higher and the open drives lower. It'll be very interesting to see how they react to the Twitter news. What's countering that is the AOL had very good revenues. And like I said, I don't try to figure all this crap out because it's impossible for me to get an edge there. And I'll base it off the price action. Mostly I expect balance. So no matter which way we go, I expect it to try to move back into the middle. I'll be looking for trap trades on both of them, by the way, which will be in NQ's trade case, right? We break over Globex highs. We maybe get up into this zone. We come back in. And it would not shock me to see a trap if wherever we end up having the low of the morning, would not shock me to see it come back for a test of that later in the day and then balance out like this, just waiting for the non-farm payrolls in the afternoon. So that's my scenario there. Let's take a quick look at the volume profiles real fast. And by the way, to my coaching clients, if anyone did not get a copy of the TradeStation file with the zones on it, send me a message on Skype, and I will get that over to you just as soon as possible. Let's see. Let's look at ES Daily. Okay, so the first thing that I'm noticing on ES is we are still one-timing. We've been one-timing now for 5 days. Okay, and that's this right here. We are failing to trade above prior day's high. Okay, clearly if we open at 1750, what we need to accomplish in order to get that done would be a trade above, excuse me, where was yesterday's high on ES? The 1751 area, right? 1749, 1751, and it looks like we're going to open right up into that. So what that means is if we simply do this, trade up, fall back in, we've accomplished no longer one timing. What does that mean when that occurs? All that means is I'm going to look for a change in market behavior at that point. It does not have to do anything from that point. However, if you'll notice, let me see here when we changed. Right here, okay, if you look back this time, right, we stopped one timing, we had one more up day, and then we moved into a balanced market. What this gave me a heads up on is that somewhere, right, and then you have to be the following day, that we're looking for a change in character in the behavior of the market. Obviously, we weren't one timing when we were in perfect balance. We stopped one timing here, as you can see, and occasionally it means absolutely nothing. It keeps going. But the vast majority of the time, when we stop one timing, as we did here, see how we stopped one timing? We still had another down day, but we were very close to a reversal point. And so it's simply a heads up is all it means. In the meantime, I do see that we are striking a slightly lower low there, just barely, apparently. And obviously, clearly, the trend is still down. And it looks like we need to get above this, above and hold this area right here. But even then, if we get above this downtrend line, right, a backside test and then up wouldn't be surprising. Or we could simply just keep going down from there. However, if you'll go back and look generally, when we are have a down market like this, like if you'll go back and reference gold, which had great trading patterns, right, we'll tend to get some of this action back, right? And we'll tend to do something like this, wherever the bottom is, whether it's 1700 or 1720, and we'll tend to get a lot of snapback action. It would not at all be surprising to me, right, if we came back up and we tested the 1780 to 1788 area, and that could certainly be our new trading level, right? As a possibility. Obviously, the old trading level is certainly still intact as well, okay? But we could simply be extending the range, and this could be the new range at this point. I'm just not certain. It's something that I'm looking at, right? But I do know this. Markets tend to not go straight down. They tend to do breakdowns, even if we are breaking down, and I'm not even sure that we are, right? What it tends to do is we get a peak, we come down, we recover, we come down and test again, we recover. We can do this for a long time, right? Over a wide range. There may be even small ranges within this. And then finally, if we're going to break down, it breaks and it gets ugly, right? But it doesn't tend to get super easy on the short side until this final break after multiple tests. So don't get locked in a bearish mode. We can certainly start to go back up. And if we look at the bigger picture, right? I'm going to do that really fast. I'm pushing the open here. I want to get done as quickly as possible. Okay, when you look at the bigger picture, we condense this, we can really come back and test this 1700 and still be just fine, right? You look back here, and no real damage has occurred. This is a pullback. If you were long at the beginning of last year, you're not sweating this at all. Keep that in mind. In order to get big moves, you actually have to scare the longer term holders, and they have huge cushions, right? Ask your neighbors if they've looked at the IRA or if they're remotely nervous. I bet none of them are. They're all up huge. They're not going to care. Anyways, that's what I've got on the ES. I want to look at the 24-hour really fast. I'm going to run over just a minute, despite my efforts here not to do so, and point out that on the 24-hour, we're no longer one-timing, regardless of where we close today. That's ended, so I would look for a change. And if I would assume that we might do the same on the daily, but even then, this is a potential heads up, right? And again, the first areas we have to test, this is the top of balance, this is the bottom of balance approximately. And again, I would not be surprised to see a test of the 66 area eventually, right? And this is clearly finding responsive buyers. It would be great to actually see a panic below and then back up and move to the other end of this range and then come up and test again. The bottom and the top of this really need to be tested at some point, but who knows how long that'll take to do. One more thing while I'm at it, since I've already missed the open, and that is this here. I'm going to give it a second because I understand it distorts occasionally. Okay, so two things here. I realize this looks like a total cluster, but I tend to keep building. I have one chart where I keep channel after channel on top of it. So the first thing that I notice is that we're overall, over a period of days, we're balancing, right? And the hardest area to take a position in this whole thing has been right here between 1745 and 1740, right? This has been the hardest place to take trades overall. Why? Because we've been pushing, we've been coming in and pushing up from here and then back in, right? Same thing here. You'll notice we're pushing from the outside, pushing in, and then from the bottom side, we're pushing down and then pushing back in. So if you initiate a trade here, right, we come down, you initiate a trade here. If it doesn't reject quickly, right, you have a strong possibility of coming back in and testing the bottom side of this channel. Number one thing I want to point out. So keep that in mind. 1740 to 45 tends to be, if we fall into that range, choppy, right? It tends to be a good target, but it's a hard area to launch a long or short from right now, right? The other thing that I want to point out, if you can see how these, this is a 1500 tick chart, and if you can see how slowly, right, we're kind of starting to get a turn here, right? You can see that turn, and the downside trajectories are less and less, right? And now we've gotten on the upside of this downside trajectory, and we're actually starting to find channels that are pointing up, right? The other thing that I want to point out on this is if we have an AB pattern, right? So often with AB patterns, you can actually get ABCD. You can also get AB, CD, but with the second portion of CD being a double extension, right? Meaning the second leg of the move is stronger than the first leg of the move. So if you see this orange right here, I've tried to highlight it, and here I'll circle it. Okay, this AB, right? Consolidation, Now we've started CD, where we're at basically right now. Okay, but if we're able to get above this area right here, we can certainly see a second push up, right? It could be on non-farm payrolls. But that second push up would take us to that 65, 66, and possibly even 70, 72. And there is structure there if you'll go back and look at that 70, 72, right? That would be the second storm of this leg. The other thing that I want to look at, right? If you'll go back and do an A, B, C, D from up here, right? We could certainly, in a smaller picture, even consolidate all the way up to 66, and then have a second leg that would take us all the way down, right? If you look at these channels and we fell all the way through them, and certainly could take us down to either 1700. I believe I measured yesterday, either 1695 to 1700 to 1690 would be fair of the larger A, B, and then consolidation C, D down. And hopefully we don't get a double leg on that, because that would put us down right near 1600 and have a lot of people in a bad mood. I like it when my neighbors are making money, even if they don't know jack about the stock market. So anyways, that's what I got, guys. If anyone has any questions, you can always hit me on Twitter or StockTwits. I hope this helps. And my name is Simon, tradeandperform@gmail.com. We'll talk to you later.